we have a tenor of 10 years to reach the goal. Is it advisable to invest only in mutual funds or also look at other asset classes like direct equity, bonds, FD, alternate investment, etc., with balanced approach depending on the risk of the asset class?
Okay. So what mutual fund offers, the beauty with mutual fund is that you can participate in all the three major asset classes. What are those three major asset classes? This is equity, which is debt, and gold. So you can individually participate in stocks if you've got the time and the effort. Please remember, investing in stocks is simple, but the only thing is that when you buy stocks, you are essentially buying businesses. So for example, if I buy a stock of, say, Colgate Palmolive, okay, I need to understand what is happening to Colgate Palmolive in terms of the business. What kind of sales are they doing every 3 months? What kind of profits are they generating? Are they able to bring out with innovative products? Is there a competition that has come into the market which is giving them a tough competition? Is their market share constant? Is it going up? So these are things, which are pretty difficult for the normal people to track because there's a lot of time and effort that goes into it. But if you're comfortable doing that, you can still look at equity direct investment as one of the options. But again, not complete 100% into stocks. Comfortable 10, 15, 20%, you can look at direct stock investing. But please be mindful that when you buy stocks of companies, you need to track what is happening to those companies. Gone are the days when people used to say, fill it, shut it, and forget it. Today, it has become a bit challenging because there are many companies, because the way that because of the dynamism in the environment, because of disruption that is happening, innovation that is happening, it is very difficult to predict and say that this company will remain for the next 20 years, 30 years. This is what is the challenge today. Okay, but if you're comfortable, you can look at a few exposures that. Now, coming to your point of should I look at bonds, fixed deposits? I have a better option in a mutual fund as compared to a bond or the debenture. Especially when you talk of corporate bonds, because government bonds, you and I as individuals do not have enough. So one is you have to have a separate account, by which, of course, you can now do it through demat, but relatively, practically speaking, these are difficult to do. So the next best option is to buy corporate bonds or debentures. The problem with corporate bonds or debentures is the liquidity is very low. Which means if I want to exit, say after I have taken a bond for 10 years, but I want to exit after 3 years, 5 years, for some reason, the liquidity is very limited. I will not be able to sell and come out of my bonds. That's the challenge. If I want to buy and hold for 10 years, that's a different story. Depending on what kind of bonds you're buying, if it is attractive enough, you can still look at buying a bond or the debenture and holding it for the period. Then you can still look at it. But I have better options in mutual fund which can give you much better returns than what your typical bond or the debentures can provide. So if I can get it, why should I not take it, with the liquidity also? So in a debt mutual fund, I can exit anytime. Okay, so I don't have to buy bonds. Two, the problem with buying bonds and debentures individually is you and I will buy and invest maybe into 2 or 3 companies. That's the maximum that you and I will buy. But a debt mutual fund buys the same corporate bonds or debentures, but is buying 50, 60, 70, 80 such bonds and debentures. So the diversification is much higher as compared to a mutual fund. But when you and I do direct bond debenture investment, you and I will hold limited number of companies. So the concentration risk increases, which will not happen in a debt mutual fund. So I have better options in debt mutual fund. So clearly look at those debt mutual fund rather than investing in a FD or a bonds or debentures. Alternate investment is a very different set of investment. One, if you have the capital to invest, because alternate investments typically require 1 crore as the minimum amount that you have to invest. So if you have got the capital to invest, after fulfilling and satisfying all your financial goals and enough investments in mutual funds, direct investments in stocks, etc., you still have that 1 crore to invest. You can take that bet of getting into alternate investments. But that's the last resort. Please remember, alternate investment cannot be your first choice of investments because they're very risky in nature. Okay? They're very risky in nature. The returns can be superb, but the risk can also be very high. And there have been cases, I don't want to disappoint you or demotivate you because we also sell PMS and alternate products at Axis, but you have to be very mindful of am I the right candidate for doing those PMSs and alternate investments? After fulfilling your other requirements, if you have enough corpus, you can still look at alternate investment. Minimum is 1 crore rupees, that's the investment size there.